Hello everybody and welcome to this week's Motor Trade Radio podcast, brought to you in association with eBay Motors Group. It is Saturday the 7th of August and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. This is episode 41, season 7 of Motor Trade Radio, bringing you all the chatter that matters. And once again, we've gathered together this week's big car retailing stories across the franchised and independent sectors for you to enjoy, all in one place, on demand, on your podcast feed.
So we've got a couple of shout-outs this week and a couple of references more than shout-outs, but I think one thing we have mentioned recently and a very good supporter and fan of the show and been on numerous times is Robert Forrester, obviously the CEO of Virtue Motor Group, and we chatted about it, didn't we, on the story? We've trailed this one already, and I'm really looking forward to this. Yeah, so he's on the Undercover Big Boss, which is the new ITV series that started this week, but actually Robert is on next Thursday evening. And so I want to definitely watch that. And if you've not seen any trailers and obviously trying to spot which is Robert undercover, I won't spoil it for you. But he does point out on his social media feed that is not his helicopter in the trailer advert. So don't be assuming that Robert has got a helicopter, but he's clear on that. And we believe him, don't we, Phil? Yeah, no, we do. Of course we do, yeah. But the snippets are great because we were speculating the other week as to whether or not he was wearing a wig. Well, you actually see him putting the wig on, and he is totally in disguise. And he does actually say that he's never, despite running the business for so many years, he's never actually sold a car before. So this is going to be fascinating to watch. Definitely. And the other shout out you've got, haven't you? The one on iPlayer. Yes. Now, regular listeners to the podcast will know that we tracked Carlos Ghosn throughout his departure from Japan. Departure. But probably more sort of he fled Japan. Escaped. Yeah, that's the word. Well, do head over to iPlayer because there's a brilliant documentary on there, Carlos Ghosn, The Last Flight, which is his first full-length interview about how he escaped from Japan, what he's doing in Lebanon now, and also quite revealing. I didn't know this, but he's an ace shooter because they start off by showing him on a shooting range, and wow, he gets the target pretty much every shot. So it is a very, very revealing documentary. Definitely worth heading over and finding that one. I think he's an ace escape artist. Yes, yeah. Well, he does go into detail on how it was done because we talked about the music box that he hid in, and you couldn't make it up. You really couldn't make it up. And this week we have got the next in this sort of the men-able moments with Steve Whitton, and he's talking about treating people the way you want to be treated, and its impact on mental health in the workplace. So we'll be playing that halfway through today's show, so do make sure you stay on and listen to that one from Steve Whitton there. Yeah, and also check out our recent interview with leading industry analyst Mike Allen from Zeus Capital. That will be on your podcast feed now, and he's talking about 5 key trends for the car retailing sector. So we have shared that on social media, and it did get good pickup, but that's absolutely timeless and definitely worth listening to. So what's in the headlines this week then, Curtis? What are we expecting? Okay, headlines this week. We have an exclusive from eBay Motors Group,
and that's looking at July used car trends. And across the media from AM, Car Dealer, Motor Trader, and Car Scoops, I think Car Scoops making their debut this week, we've got staff and semiconductor shortage throttle July new car registrations. LCV market sees first registration decline since December 2020. More needs to be done to meet EV targets, warns Cox Automotive. Car retailers must embrace every opportunity in the second half for after-sales Tsunami. Mark Lavery on why he wants to buy Cambria automobiles. And finally, Skoda's novel solution to how, what to do with those end-of-life EV batteries.
So, like you say, we've got the July figures now have been published by the SMMT, and as you said there, Curtis, that I think it's kind of the sensational headline there that shortages throttle July new car registrations, and they certainly have, because the July finished at 123,296. Now, that was 29.5% down compared to July of 2020, with obviously an impact there in private down by 25%, fleet down by 33%, and business down by 25.2%. So we have seen that decline, and that takes the year to date actually is up compared to last year, because of obviously what happened through that lockdown in March through to when the showrooms reopened up on the 1st of June. So the year to date is actually 24.7% up, at 1,033,000 compared to 828,000 for the same period of last year. But it is sort of, to put it in a little bit of context here, that you think about what that means in terms of the year before, we are still down 21.6% compared to a July of 2019, where we finished on just over 157,000. So I think what Mike Hawes is saying there, that we are now doing some trading, but actually that supply that we've continued to talk about on the podcast is now having a severe impact on registration volumes.
Yeah, and it's also worth pointing out that year-on-year comparisons are just starting to make a little sense, because rewind to July last year, dealerships were open for business again, and we had that huge pent-up demand. So that's what we're comparing with. Now, the July figures have prompted the SMMT to revise downwards its full-year forecast from that they were predicting 1.86 billion as recently as April, but they've forecast that down to 1.82 million. Now, within the figures, it's worth looking at EVs and plug-in hybrids, because they both outsold diesels. So battery electric vehicles sold just over 11,000, plug-in hybrids nearly 10,000. But diesels were less than 9,000. They came in at 8,783. So both electrics and PHEVs have overtaken diesel in the month. To put a little perspective behind that, it's worth also pointing out that petrol still totally dominates the market, because that was 55,250 units. And looking at year-to-date diesels, 101,000, that compares with 85,000 battery electric vehicles and 68,000 plug-in hybrids. So if you're looking at the market share year-to-date, diesel 10%. If you add BEVs and PHEVs together, that's 15%. So it's just showing the growing strength of BEVs and PHEVs. And the SMMT say that EVs are now expected to account for 1 in 6 new cars in 2021. I know we're returning to EVs in a couple of stories' time as well.
Yeah, definitely. And I think in context to some of the other markets that I've been looking at, in some of our European markets. So Germany finished at 236,000. That was 24.9% compared to July of 2020. and actually down 29% compared to their pre-pandemic level of 332,000 in July of 2019. Italy, year on year 19.3% and 28.1% compared to 2019. France, this one is a big one, unfortunately for France, down 35.4% year on year at 115,000, and actually 32.8% against the year before of 2019. And then lastly there with Spain down 28.9% year on year and 28% compared to 2019. So again, as you said there, we're getting a sort of bit of, you look at those figures and there's a bit of consistency now between July of 2020 and July of 2019 now, of where actually this is less about the pandemic and more about the supply of vehicles and that semiconductor issue that we'll touch on a bit later.
And heading over to Motor Trader, the headline there is LCV market sees first registrations decline since December 2020. So the LCV market saw its first decline since December, as July registrations fell 14.8%. Now, similar to the car registrations, a lot of this is being attributed to the shortage of semiconductors, which meant only 23,606 vans were registered during the month, and that actually equates to a 4% decline compared to the pre-pandemic 5-year average. And as we say every month, we look at the van figures, but interestingly this month, demand for larger vans, which does tend to propel the van market. So those vans weighing 2.5 to 3.5 tons, they actually saw a decrease of 5.2% to 16,653 vehicles.
Yeah, so I think, again, as you said there, Curtis, I mean, they've had a fantastic run for LCV since, as you say there, since December. But we are now starting to see that bite of supply now as we've sort of entering through this second half of the year, which, again, referring to the interview with Mark Lavery later, that he does obviously look at the second half of the year with caution. So we're moving over now to Exclusive, which is from the sponsor and associated with the show from eBay Motors Group, and this is their market view for July with some very, I say great stats, not necessarily great stats, are they, Curtis, but very interesting stats if nothing else.
Yeah, definitely. Now, we report on this every month, and it's fascinating to see how this market's panning out. So they look at stock volume per dealership, and in July this averaged 40.2 units, and that's marginal improvement on the previous month, June, when it was 39.9, which was actually the lowest point of the year. So there's not, as I say, it's a marginal improvement, but the problem, as we talk about on a regular basis, is getting hold of stock, and dealers really are feeling the pinch here. There is a shortage out there, and the figures show how this affects the different sectors. So franchise dealers, they average 50.9 units, so that was marginally up from 49.7. Supermarkets, they were up from 263 units last month to 276, but looking at independents, they were down from 30.5 units to 29.8. And also looking at average days to sell, they actually increased month on month by 2 days. And one of the, I guess, most notable aspects of this is in the independent sector, where it increased month on month from 46.7 days to 50.7. So, an increase of 4 days there, whereas, the franchise sector, it was just 1 day, and supermarkets, a marginal difference there from 27.5 days to 27.1 days.
Yeah, I mean, you look at the stats, and again, like we were just talking about in the previous story with Curtis around the new car registrations, looking at them compared to 2020 and 2019, but actually the figures in the report do refer back to 2019, and when you refer into that sort of franchise dealer average volume moving up from 49 to 50.9, they've actually dropped from 66 in July of 2019. Independents, significant drop there from 47.5 average stock levels to 29.8, as you pointed out. But actually supermarkets, they've gone from 474 average stock level down to the 276 that you mentioned there. So again, they do align with the days to sell, obviously, in terms of quicker days to sell based on less stock available.
Yes.
and moving it that way. But again, we're starting to see where dealers now are sort of holding out for profitability because they can't replenish the stock very easily, and you look at them volumes through those through the independent franchising supermarkets, significant drop in average stock levels for those guys.
And looking at pricing, because obviously last week we spoke to Cap HPI about what was happening in the wholesale sector. So eBay Motors Group research of pricing, advertised prices over the course of July, shows a 2.9% rise across the board from £12,174 to £12,525, and within this, the car supermarkets, they saw their average prices rise 6%. Franchise dealers were up 4.2%, but independents were down 1.8% from £9,124 to £8,958. And I think that probably reflects the problems they're having accessing nearly new stock and trading older age stock for obviously lower prices.
Yeah, and what's interesting is that what eBay have pulled out this month is a price movement by model comparison, which again, this is available I think on Monday, from Monday, so people can access the report from Monday. But they've pulled out five examples where the vehicles have moved over the period, and year on year an Audi A3's gone up 10.1%, BMW 3 Series on average 15.9%, Ford Focus up 11.7%, Mercedes GLA up 15.9%, and a VW Golf up 11.5%. And those are samples of average retail prices for vehicles less than 3-year-old and less than 30,000 miles. So again, reflecting what you were saying earlier, Curtis, about that days to sell and the stocking levels, and what Cap HPI were talking about last week is, it's evidence there now in the retail market of that year-on-year price increase across those models.
And just returning to that BMW 3 Series, you mentioned that was up 15.9% year on year, but even month on month, that was up 7.9%. So, we are seeing some significant rises now.
Definitely. So we'll head over to the next story, and this is in AM Online about EVs and that the government needs to do a little bit more to support it.
Yeah, so the headline is "More Needs to be Done to Meet EV Targets," warns Cox Automotive. So Cox has warned that more needs to be done to encourage consumers to adopt electric vehicles ahead of the ban of ICE-powered cars in 2030. So this is based on some research and views that you've got, Phil.
Yeah, we joined up with Auto Trader and Reddit. Reddit did an in-car driver survey to get the views of the consumers in terms of where their anxieties towards EV met, and when they were thinking of changing to an electric vehicle, and if they did make that move, whether they'd move into a new electric vehicle or whether that would be a used electric vehicle. And what was highlighted in this report was significant around the work that ourselves and associations across the trade and people like Auto Trader are trying to get the UK government to really get behind the adoption of EV, and that not only new electric vehicles, but actually they need to start thinking about used electric vehicles and how they're going to get, one, the confidence in the network towards used electric vehicles, and the consumers thinking about used electric vehicles as an option for them. Even the early electric vehicles, and we had Alan on, didn't we, talking about that Prius early. I think it was a Prius he had. Was it a Prius?
Yeah, it was JA Autos.
JA Autos, wasn't it? It was Alan from JA Autos, and there is customers for these cars, even the early models with low range. There is customers for these cars, but I think one thing is clear with this report is that trying to get the government to do a little bit more about it, that we do need to think about the used electric vehicle sector as well as the new. But I think you and I listened to and read the same thing, didn't we?
We did, yes.
24, 48 hours from Times. I think you read it and I heard it on Times Radio. And I'll let you tell the story of this one, but it kind of tells the story of what we're talking about, doesn't it?
It does, yes, because the industry is coming out with all the facts, all the figures, indicators of consumer trends. But the Times picked up. Well, they interviewed Allegra Stratton, who's the government's climate spokesperson, and they asked the obvious question: "What do you drive?" And it turns out that she drives what she describes as a third-hand diesel Golf, and they asked about her plans to go electric, and she said that she doesn't actually fancy the idea of going electric yet because she typically travels around or over 200 miles to see various members of the family, and she would consider electric if ranges were better. And she goes on to say that she would also consider electric once charging times drop below 30 minutes. So a bit of a wake-up call here, because a lot of EVs can go over 200 miles and they take less than 30 minutes to charge. And this was jumped upon by quite a few people in the industry, including AA President Edmund King, who said it's just so unhelpful because it's this sort of misinformation that's perpetuating some of the myths around EV.
Yeah, and I mean, I heard it on the radio where they were playing a clip from the interview with her, and that I can't remember. I'd have to check it, but I think it is either 11 or 22, and I can't remember which it was. But excuses of why she doesn't drive an electric vehicle, be it family visits, whatever that is, she came up with one excuse after another, and it kind of makes the point, doesn't it, that if the government aren't behind the adoption of electric vehicles and don't understand electric vehicles and how they can be a vehicle for private and business use, there's a problem. And I think that's what the industry is trying to point out to the government, that they really need to get their head around it. And I think you pointed out just before we started recording, I'd be interested to know how many manufacturers have approached her to offer a vehicle to test and to use in a daily life, rather than that, was it third use diesel that she referred to.
Yeah, and in the interest of balance, it's worth pointing out that I recall a recent interview with Ed Miliband, and because he talks about climate for the Labour Party, and he was asked about if he drove an electric car, because he was actually promoting electric usage, and he doesn't. So again, I'm sure some car manufacturers have been onto him and try to encourage him to at least get behind the wheel of an EV, because it's important for politicians to have a much better understanding than some of them apparently have at the moment.
Yeah, I mean, they've got to understand what they do, how you can use them, and maybe in many ways what the challenges are in the network, where they need to get behind and support it and understand where the infrastructure is an issue, where the timing of vehicle charging is an issue, the off-street charging and on-street charging is an issue, and without them being behind the wheel, then they won't have an idea, will they? And that's the significant problem with all of this.
So you're listening to All the Chatter That Matters on Motor Trade Radio, brought to you in association with eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines, and available on demand wherever you are on your podcast feed. This week's Men-able Moments from Steve Whitton, which comes up next, looks at personality profiling and the implications of that old saying about treating people the way you want to be treated, and what that means in the workplace and its impact on mental health. So over to Steve.
Yeah, hi guys, welcome to another Men-able Moments with me, Steve Whitton. Have any of you ever used the phrase, treat people the way you want to be treated? The reason I asked the question is that this week, one of our clients has asked us to get involved and do some personality profiling. Now, this stuff's been doing the rounds for years, and it does hark back to my previous life in training and development, where I used it quite a bit. And we use a system called DISC. And it's not dissimilar to many others that are out there, especially that it breaks personalities and behaviours down into 4 main areas. Now, the reason I ask about do we use the phrase treat people the way you want to be treated is the danger with that is if you treat people the way you want to be treated, you inadvertently run the risk of alienating 75% of the people that you deal with. And the reason for that is because the premise of these personality profiling tools is firstly to understand yourself, secondly to understand others, and lastly, to be able to adapt and flex. Now, this is particularly poignant in the area of management and communication. And I saw something this week that said that potentially 31% of managers, only 31%, feel that they are confident in dealing with mental health conversations amongst their colleagues. Now, I would venture that 31% is actually quite ambitious, because some of the managers we come up against, the very reason they don't have conversations about mental health is also because they're really not confident in it, and they are worried about the response and what it's going to mean, and whether they've got time to fit in a conversation with someone to delve into details and so on. But that also links back to the personality profiling thing, because if you take those 4 types of individuals, the 4 personality trait areas of dominance, influence, steadiness, and compliance, those personality traits are going to determine the way that you interact with the world generally. And so each of those will have a very different perspective on mental health for themselves. They'll have a very different perspective on what that looks like for other people. And the stronger amongst those managers will be the ones that are able to adapt and flex, and to be able to kind of, meet other people where they want to be met, really. I don't mean that physically, of course. I'm talking about in the metaphorical sense of the way that they communicate. So again, a couple of things there to think about. One is, if you treat people the way you want to be treated, are you really only hitting 25% of the people that you interact with properly? And the other thing is the confidence of managers and leaders in dealing with conversations around mental health. And I've got to say, that's not about just awareness and having an understanding of what it is and what to look for. For me, that is genuinely about the confidence and the emotional intelligence. And I think for me, that's also about going back to that personality profiling and saying, how does each of those personality types approach it? So, something to think about. If that intrigues you or you're interested to know a bit more, then get in touch through menable.org or on LinkedIn, as always. And we'll catch you next time. Take care.
Well, some interesting thoughts there from Steve once again, and this is part of our ongoing series. So we will revisit Men-able Moments again in 2 weeks' time. But if you've got any thoughts on that, do head over to the Men-able website and get in touch with Steve.
definitely. So moving back to AM Online, and I think we've visited the insight from these guys previously on the podcast, but I think this is now back to what happened through the pandemic through 2020, and significantly towards the extension for the MOTs that was instigated by the UK government. And what they're saying is that car retailers must embrace every opportunity in H2 after sales tsunami. And this is regarding that, the extension will create this tsunami of people requiring MOTs and work on their vehicle, and potentially help support the challenges of profitability that may be faced from a new and used vehicle supply perspective in the after-sales part of the market.
Yeah, and the research comes from GIPA UK, and they report that the business's recovery from 2020's COVID-19 lockdowns has delivered volumes 2.9% above its expectations. So it is actually saying that this is on the back of a especially strong Q2, and that the balance of the year looks potentially very strong. So as we know, and we've said on the podcast before, the seasonality of after sales has very much been flipped on its head by that 6-month exemption that you mentioned, which was introduced in April last year. So this does mean that there's a big opportunity for a lot of work coming in between July and December. So this is really highlighted in the report. So GIPA said that of all the MO tests performed in 2021, about 40% were between January and June, and the balance, the 60%, will be from now until the end of the year. So there is a big opportunity there. Yeah,
no, I think you're right. I think this is a key now, isn't it? That we're out of normal seasonality of MOT renewals, and I think the aftermarket, be it franchise independent dealers or independent workshops that do the MOT, and need to really get behind the opportunities that are sat there in this second half of the year. And as you say there, GIPA are saying that that trajectory of growth that they've seen through the early half of 2021 looks like it is on that increased trajectory throughout this sort of second half of 2021. So I think it was a case of capitalising on that opportunity and that revenue, that commercial income that is available.
Yeah, and just to show how much it has changed. So I mentioned that it was 40% between January and June. Well, in pre-COVID times, that would have been 53%. So most of the work would have been in that first half of the year. And this year we're expecting, GIPA say they're expecting 60% of that balance to be between now and the end of the year, whereas traditionally that would have been 47%. So, it does show how much that has grown as a result of those exemptions.
Yeah, definitely. So we're heading over to car dealer now, and we wouldn't expect anything less from our good friend Mark Lavery, and I think we do need to get him back on the show at some point. Because if you ever want to know anything direct, Mark will give you it direct. And he is, great friend of ours. And he was interviewed by Car Dealer from a good friend, James Batchelor there, and talking a little bit about, obviously, the takeover and what he's doing, why he's doing it. Very direct on what he's doing and what the business is worth, and some of the rationale behind why he's decided to take it off the stock exchange and take it back into ownership. Talks a little bit about the agency modelling and whether he believes it's coming, and actually does then enter into his views on the semiconductor crisis and what long-term, short-term that will have on the industry, and what his thoughts are of that. So it's a fascinating interview, but the car dealer have done a release on this, which is the bit that we're going to reference now.
Yeah, so the headline from Car Dealer is Mark Lavery on why he wants to buy Cambria Automobiles, agency sales and unprecedented used car sales. So as you outlined there, Phil, it's worth spending a bit of time watching the interview. It was about 25 minutes long, and it is very, very good. Mark is incredibly open. He always is. He's very direct, and it's probably worth our while just focusing in on this movement to take the company into private ownership, because there is a good update here on it. So the latest update on the story was actually from 30th of July, when Cambria announced to the stock exchange that it had received an increased cash offer of £82.5 million from Mark Lavery to take the group into private ownership, and this is mooted to be a final offer, with shareholders recommended to accept it. Now, in the interview, Mark, admits that being a public company, and it's his words, he says it hasn't really worked, and he points to the share price, which started at flotation, which is over 10 years ago now. Started at 50 pence per share at launch, and that dropped to as low as 33 pence in April 2020. Now, that of course was during lockdown, but he's looked at how the share price has performed over a 5-year period, and there's been it's achieved high 40 pence to low 50p's, and he makes the point that this is despite having grown the business significantly. So the best they achieved was those high 50s, and it floated at 50p. So he's saying that being a listed company is not working for the business or its shareholders, and he goes on to say that the business has no ambition to be one of these super groups with a £2 to £5 billion turnover, and the Lavery family is the biggest shareholder. It does want growth, but not at that scale. So he's making an argument for it being a listed company not actually being in the business's long-term interest anymore.
No, and he does point out in the interview that the business wants to do other things, that they are listed as a motor retailer, and they're wanting to move a little bit away from that because they believe that's probably more damaging towards the share value of what the business wants to do going forward. So it is, again, very, very fascinating, and as he's pointed out, because he has, in fairness to him, he has come under attack from many of the shareholders, that and not for a bad reason. It's because they believe that it's a good business, and they want to sort of take dividends and income from their shares in the business. So taking it off the stock exchange doesn't allow them to do that. But I think those with shares, they have been offered investment into the business itself, as an exchange for their shares. So it's not all straight off and nothing else. But again, he's always pointed out that it isn't a case of they'll sell to somebody else, because he won't sell to anyone else, and him and his family are the biggest shareholders. And so it's either he takes it off the stock exchange or it stays on the stock exchange. And it's a very frank and open interview there with Mark Lavery. And as you say, it does talk about agency model, and it does share that. But what was interesting, and you didn't guess at this number at all, did you, Curtis?
No, nowhere near.
You watched back to the interview, but a fascinating comment came out of Mark in the interview, and it was on the subject of semiconductors, which we've talked about on a regular basis through the podcast. But he talked about one of his brand partners had referenced that when you put it into context around the demand and reliance of those semiconductors and microchips within a vehicle of today, with the technology and connectivity that these vehicles have, that one of their brand partners, their vehicles have on average 1,000 semiconductors, microchips in those vehicles. So that's everything from your head-up display and other things that these vehicles have. And that's why there's a significant problem. And he calls his customers guests, and he's saying that's where their guests are now having to compromise on specification, because the manufacturers just cannot supply the spec because they haven't got the semiconductors to add those spec levels to the vehicle. So if you want a head-up display on one of Mark Lavery's brand partners' vehicles, then you may not be able to get it, because those are probably the options that they can't get the microchips and semiconductors to support. So, fascinating interview. He does talk about the new car market. He talks about their business being down 66% year on year on new vehicle stock, and the impact of the September order bank, and how he believes that he is very cautious about the second half trading of the year. So hopefully we'll get him on the show again in the coming weeks and expand on some of these conversations with him, and you can look forward to hearing from Mark yourself.
Yeah, definitely. And, on the agency model, he does appear to be unconvinced about the existence of a pure agency model, and says that he has seen some documentation from OEM partners, and he just doesn't seem to be convinced that they're anywhere close to a pure agency model. And you do rather sense that he favours the existing franchise model. Yeah.
So again, worth watching, worth just putting that 20 minutes aside, watching the interview there with Mark, and as I say, we'll try and get him on the show in the coming weeks. So we have got a great, and finally, and connected to,
yes,
and apologies that connected, but connected to our earlier story around electric vehicles. But you found a cracking story here in Car Scoop about Skoda to use second-hand EV batteries for powering up its retail network, which is a fascinating concept for them.
Yeah, so Skoda have addressed this ongoing problem of what to do with end-of-life batteries. So what they're doing basically is bolting them together, creating a hub, and using them to power dealerships. So they've actually trialled it successfully in Prague, and the next step is to use these hubs across Europe, starting with obviously the Czech Republic, moving into Germany, Netherlands, and Slovakia, with a potential of it coming to the UK. And Skoda has the potential. The piece says to produce more than 4,000 of these hubs in the coming years. So without getting over technical, each hub apparently can hold up to 20 13 kilowatt batteries from Skoda's plug-in hybrid models like the Octavia and the Superb, or up to 5 82 kilowatt batteries from some of its pure battery electric vehicle models. So the total capacity can reach 328 kilowatts per hour, with the ability to channel it through 150 kilowatt fast chargers. So this is scalable, and it does seem to be a sort of sensible solution to what is a growing problem.
Yeah, it does. I mean, you look at the image and you do wonder where, looking at some of the UK retail dealers, where they would just shove that in the back of the valeting bay and, a set of car mats shoved on top of it, etc. But being a little bit less facetious there, that I think I think it's a great idea, and I think the whole thing around electric vehicles, we talk about this, the vehicles and the batteries coming at the front end, but it does need that recycling and renewable side of an end-of-life battery. And I know some manufacturers are using some of the batteries in their factories for moving things about, and AI technology that they've got in some of their factories, such as Nissan, I think, is one of them. VW have recycling and renewable with their batteries in some of their factories. But I think putting this within the dealer network and giving them the recyclable output of the batteries, the end-of-life batteries, is a fascinating idea. And it does look fairly simple in many ways, to a certain extent. That it starts off whether that's, as you say, Curtis, 13 kilowatts or 82 kilowatts. And if you want to scale it, then you have 2 units, 3 units, 4 units, and the output is as per you require. But I mean, it's a great concept, and I know they've teamed up with this to produce it. So it'll be great if this does come to the UK market once it's been tested elsewhere. But we want to watch.
Yeah, and definitely worth heading over to the story there from Car Scoops, because as you mentioned, there is an illustration of what this would potentially look like at a dealership, and it is effectively a big white box that's full of batteries. Yeah,
and they're talking 4,000 hubs in the coming years. So, it's obviously up and running. They've got plans for growth. They're saying that Europe has already put 160 pre-orders in, coming from the Czech Republic, Germany, Netherlands and Slovakia. So again, starting to move at some significant rate, because I think this goes back to our earlier story, where you get the back end right, it makes the front end a lot easier if you know what's happening at the back end of it as well. So great concept, and look forward to seeing what that one does come to the UK market.
Well, that was a busy show, wasn't it?
Yeah, a lot to go into there.
Yeah.
Not as busy as last week. Last week was a tough one, wasn't it? But we had IT technical issues last week.
Yeah, I mean, fingers crossed, absolutely no IT issues this week. So hopefully it's been fairly smooth for you listening as well. But unfortunately, that's all for now. So you've been listening to the weekly Motor Trade Radio podcast, brought to you in association with eBay Motors Group. Thanks for joining us for all the chatter that matters. We're back next weekend with our take on the latest car retailing headlines from across the media. Until next weekend, it's goodbye from me.
And it's goodbye from him.